Jerry,
Oh,
Will,
all right, I'm here. How are you
I'm
doing
doing
this
pretty
morning,
good.
Dale?
It's been a while, buddy. What's new?
Oh yeah, well, it's kind of same old out there, right? The markets keep going higher. The government keeps digging a bigger hole. Uh, Bitcoin keeps getting more popular. It's
Yeah,
it's all it's all kind of the same narrative. And it does seem like we've seen some of that money come off the sidelines that have been sitting with
yeah.
those expectation of rate cuts, coming, ham-handed or not. Let me get my screen and I'll share it here.
Well, I like your new picture. Black and white.
Oh, thank
You could have
you.
been a movie star, and you know before they had
Or
talkies.
or an Elvis impersonator, I've been
Uh,
told.
yeah, you're very good. You put me to shame.
Oh, come
So,
on.
oh man, you are. Well, everyone's waiting for it at the end of the interview. So let's see the dashboard, bro. You have
Oh,
upside targets and like S&Ps and
yeah, let's talk about it. So this is just, people come to followthemoney.com. We have our weekends charts page. We put these up every weekend. We cover many different markets. We like to follow trends. We specifically focus upon three different types of trends based upon the chart time frames. We focus on monthly, weekly, and daily. Each of those, of course, um, in fact, let me open something else up that might be helpful here. I'm going to open up our latest issue of our Robinson report because in it, here, let me open this up here also. When I'm talking about that, this kind of really makes real sense of these trends, so we can kind of visualize, what's going on. So this will pull up, and let me just come down now to that page that I was referring to, which is here. So here's the current market trend. So we have a swing trend, which is our daily trend, and then we have our position, which is our weekly, and then a long term, which is the monthly. And you can see that right now the S&P and the Nasdaq, which we're using these ETFs as proxies, these are all well positioned. Gold softness on the near term. Dollar, a real mixed bag, of course, mainly pointing down, but still clinging, believe it or not, to a long term. Well, it hasn't entered a long term downtrend yet, which is kind of interesting. Softness there on Bitcoin in the near term, but overall still looking really good. And if we look at the second page, we'll see something interesting here as well. Russell 2000 beginning to join the club. We saw that recently happen. That's
yeah.
an interesting talking point there. And then China. Guys, I don't know if folks are paying attention to China, but right now, take GXE, for example, a very thinly traded ETF. It's the S&P China ETF. And that ETF up, and that's a pretty broad, like 1,200 companies. So it gives you a nice broad exposure to the Chinese market, but it's extremely thinly traded. So we never trade it. We just use it for tracking purposes, personally. And GXE is up 27% year to date. In fact, if you look at the current markets, year to date, this was as of Friday's close. You get Ethereum sitting up here now toward the top. It's actually really come back, as your previous guest was saying. We had that almost an all-time high. But then silver and gold, look at these gains. China and Bitcoin. People aren't realizing that, yeah, they know about Ethereum, they know about silver, they know about gold, they know about Bitcoin. But China is practically tripling the S&P 500 this year, and they're sitting on a massive trade surplus. Massive, massive trade surplus. So it's interesting in this environment where the United States has been targeting other countries, trying to get its trade deficit under control, trying to get its ducks in a row. And China just continues to navigate this storm to their benefit. And I think it's interesting. But anyway, the Russell or the S&P up about
So is
10%.
and the keep kicking the can down the road with tariffs on China. This is exactly the game they want, isn't it? I mean, the longer it's confusing to have a deal with them, and the U.S. feel at risk by upsetting them, they could just keep stringing us along, right?
Oh, sure. Oh, yeah,
Like
absolutely.
Putin.
Right. Exactly.
Only one's economic, one's military. But they're all economic, aren't they, Jerry?
That's ultimately in the end, right? All wars are bankers' wars in the end.
Yeah.
So yeah, but how about the budget deficit? We have a $291 billion budget deficit in July, right? That's here in the United
Yeah.
States. That was 20% higher than the same time last year, that same month last year. Then on top of that, you have the national debt sitting at about $37 trillion dollars. You have inflation, beef, all-time highs.
Alzheimer's.
Eggs are
Yeah.
still expensive. Electricity costs are going through the roof,
Yeah.
and mainly due to AI demand, or a lot of it has to do with the AI data center demand. And you got the latest July PPI numbers came out. Those were
Hot.
they were hot. They were up near 1% growth for the year over year,
So
or I think actually
you
just
never talk
July.
about bonds. Do you avoid them?
Yeah, it's not really my thing. I certainly
You think they
think
could ever
they have their
work
place.
again? You think they could ever work again? And under
Well,
what circumstances?
I think bonds have their place. I think there's other alternatives that people can consider. It's not something that's. I think that they have been exposed in many ways, of course, over the last few years. People have seen, they could lose just as much money in bonds as they did stocks. That was kind of, to
Mhm.
their chagrin. Um, and I think that overall, I'm not interested in loaning the government any money. I'd rather loan it to somebody else than the government. I don't think they are thinking of me. I don't think they really care about me. And I also think that over time, um, it's going to become so burdensome to pay for these things. That's why we see you're talking exactly about what Trump has been pounding the table on with Jerome Powell. Basically, here's the line, Dale. Trump says this is the greatest economy ever. It's never been better, right? Under any circumstances, of course. So now, in this greatest economy ever, where everything is great, let's demand an emergency rate cut by 300 basis points from the Fed. Okay,
Oh, you
nobody's ever
mean,
heard of anything so zany in their life. Like, in other words, if it's not broke, you don't fix it. And
well,
if
he wants
rates,
to be like the Swiss, but that would turn us into Zimbabwe.
right, we don't get to, we can't do that. We got, and the thing is that the rates at current levels, nobody likes it. I certainly, unless you're making money off it, of course. But as far as paying the interest, you certainly don't want to. Mortgages are out of reach and things like that. But you just don't get to turn these things down because there's an election. I mean, I know that's how they do it. I know it's all politicized, but this is real dangerous when they start taking our money and they start doing these very blatant kind of manipulation games right in front of us, and we don't even know what's going on. That's the worst part, Dale. It's that we think it's all a game or a big charade. We don't realize that these guys are talking about our children's future, that
Yeah.
they're tacking on money that we can't pay for. They're tacking on debts that we can't pay for, and they all think it's a big joke, and they're all just trying to win re-election. So I got to be
Why are
honest.
why are they going with stablecoin?
Well, the stable coin is a really smart move. It reminds me of the 70s petrodollar system deal. Back in the 70s, right after the dollar came off the gold standard,
Yeah.
when Nixon closed the window, they realized that they had to keep this artificial demand for the dollar. Up until that point, the artificial demand was, well, if I hold dollars, they're as good as gold. And so, okay, well, then I'll hold them. So it kind of created a demand. They didn't really necessarily have to have them, but it was a kind of a hedge. Well, they did need them, but not
Hmm.
as much as they were going to need them in the petrodollar era. So after they decoupled from gold, then they said, well, you got to have dollars to buy oil from this country and this country. And pretty soon it was all countries. They made deals. And then, of course, that was good news for these oil producers because they would get weapons deals from the United States if they would price their oil in dollars, and that all worked out great. But that's been breaking down, as we all know. The stablecoin legislation is really, in my opinion, kind of a coup. It's kind of a way to prop up the dollar. The dollar is actually, in terms of its share of global trade and use, it's still way up there. It's not like it's
Yeah, it's
completely
not the end
halted.
of the reserve
No,
currency status
no, not
that we
necessarily.
hear all the
That's
time.
right. Absolutely. Yeah, we're not quite there. there's still, there's still robust demand everywhere, and it's still the majority used currency in most places. But the thing is that over time, we know that's not going to work out so well because of all the debt. And so you have to try to find other ways to create the demand. And the stable coins were brilliant. Stable coins, the United States understands these, that if these are US dollar backed, well, then you create the demand for the dollar. It's all underlying. You never see it. And it makes total sense for stable coins to be in use. I think they're going to create a lot of demand, incredible demand for Ethereum and for several other uh, protocols, which are already benefiting from this legislation. But the stablecoin is typically backed by the US dollar. And so therefore, it serves as a demand point for dollars as we move into a digital world. And it was smart for the US to get ahead of that. I think it's going to serve the US well going down the road. However, other countries can do the same thing, and I think that it's kind of a race now to the bottom. And I think one of the best things people can do who are listening to this, obviously they want to protect themselves, they want to protect their families, they see the writing on the wall, but at the same time, they keep seeing things go up, is that we've said it over and over on this uh, broadcast before, Dale, is that you got to invest in assets, right? You got to hold them. You got to buy assets, high quality assets, and hold them, because those things are going to go higher and higher and higher because of our economic debt-based monetary system. Our debt-based monetary system just basically drives up asset prices. And that's why the rich keep getting richer and the poor keep getting poorer, is because the rich own the assets. And I think a mixture of assets, some stocks, right? Some Bitcoin, some real estate, some some business interests, just spreading around the wealth and trying to focus on high quality assets is the very best thing. And then doing it consistently, dollar cost averaging, those types of things, and then learning to trade around those things. It takes effort, but we're in a pickle here, and it's important.
Well, okay, you talk about this pickle,
Mhm.
and you talk about owning assets, and I know there's a difference between what financial markets are doing and what the economy is doing, and they could de-link for a while. But when you talk about this pickle, isn't there room during this pickle for it to go the other way and we're so leveraged, we're so financialized that there could be a huge liquidation break, especially as more supply comes on. I guess there's a wall of rolling over debt early next year from corporations that borrowed at zero. I mean, there has to be a price for the pickle. They don't give them away free.
Well, there's definitely a price. It's like a game of musical chairs. Who's going to pay the price? I don't know.
Yeah,
Here's who I
every
know. Here,
everybody,
everybody's going to have to, yeah, at some point. But the thing
but
is that
but the 1%.
perhaps because they're able to weather it.
Yeah,
But the thing is that, yeah, inevitably. But I have to be kind of sadistic here, just briefly, and say that, as a person who likes to invest in high quality assets, I almost invite the next sell off. I almost,
you'd like, yeah.
I would be just fine with it. In fact, here's how we know how trigger happy Mr. Trump is that when we went through the last time that he was in office, he racked up, I think, close to 8 to 9. I think it was $8 trillion in national debt. So he was tacking on like $2 trillion a year to the national debt. Now, some of that was COVID, but that's the point.
Yeah,
That's the whole point. Is that not to make it political, but remember, he just think about how this works. He said that COVID wasn't a big deal. Okay, he spent more money on COVID than anybody had ever dreamed of. So if it wasn't real, yet he spent money on it. So if it's not real and you spend money on it, that's not very smart. And so the point is that even things that he don't thinks is real, he's going to spend trillions of dollars on. So if he thinks something is real, he's definitely going to spend the money. Point being is that if we have another crater in the market, guess what Mr. T is going to do, right? He's going to be pumping so much money, it'll make your head spin. And that's going to drive the markets right back. Last thing this guy wants is a losing year in the stock market. Now,
Yeah, especially going into
absolutely.
midterms.
Yeah, they're going to put lipstick all over that pig. And they have a lot, and people want it. So we're in a situation where owning assets, yes, you're going to have those moments where they're gut wrenching and you got to weather through. But in my opinion, you just continue to add in those moments. And
So
remember,
you would welcome a 50% sell off.
it would hurt, it would make me feel sick to my stomach, but I'd be buying it. Yeah, I would
Okay.
be buying it, and I would be
That
looking.
that
Yeah.
there's a man with conviction.
Yeah.
So you're not going to even try and dance out of the way. You would just ride it out, wait for your buy signals to develop again.
Yeah, because the way we approach it is that we've been taking gains in this environment. So every week, almost every week, over the last couple months, I've just been pruning Nvidia. So that's our largest holding, and it's
Okay.
up. If you look at it on the monthly chart, like it's way up there in terms of the monthly RSI. And so it's
Yeah,
just
it's diverging everywhere too.
yeah. And
Yeah, I know why you're doing it.
we're taking money out of Nvidia. We're looking forward to taking some money out of Apple because it started its next up move and it's above its 200-day again. And so we're
Yeah,
going to take some money out of that. And then so we take money in these good times, and then when it gets hurt or when things go down and assets prices get hurt, well, that's when we
yeah,
want to move in and buy more. And so you take it in time like you buy it in times like
yeah. Nvidia would be
and
a
rinse and
great buy.
repeat.
Yeah, 150 buying Nvidia 140. If it got down there, it'd be a great buy.
Yeah, absolutely.
Yeah.
Yeah, yeah.
All right. So highest conviction trade going into the fall because you and I will be talking again in November.
I would
So
say so
go ahead.
at the beginning of the year, we had said we expected the Nasdaq and the S&P, to do well. We expect use the 500 as the benchmark. So Nasdaq, we expected to beat the S&P. So far, it is. We expected
Yeah,
gold to have a great year. It's doing great. We expected the dollar to fall because that's what it typically does when Trump comes into office.
that was a
Or
great call.
yeah, so that one definitely went down. We expected silver to go up. We expected China to go up because they win. We didn't say much about
Good
crude,
call.
but then Bitcoin and Ethereum were two of the markets that we expected to do very well. And quite frankly, they've done incredibly
Yeah,
well
yeah,
over the last little bit.
yeah.
2025 has been a good year. But I think if you're talking about highest conviction trade, it would have to be Bitcoin and Ethereum.
Okay.
I think both of them are going to have a really, really great year. And it's interesting because Ethereum was so ignored for so long,
Yeah,
and it was a market that we've been long Ethereum since 2017. So that was like one of the what was we were very excited about Ethereum when it came out. It was like trading for $12 or whatever. It was an asset that we thought was going to do well, and it did, but it kind of got overlooked even though of its dominance. And now we can see prices knocking at the door of the former high. In fact, I think this chart is a little bit. There's the 2021 high there. So we expect that this is going to be violated to the upside. And the reason why we are so bullish on Ethereum in particular is because, quite frankly, it's more of a productive asset than Bitcoin in terms of the fact that it pays a yield, and Wall Street loves it. And you were talking about bonds, and about why do people
yeah.
buy bonds? Well, they want a yield, and so Ethereum is kind of like
Right.
this really its time has kind of
It's a
come
new
where
instrument. Yeah,
it's a new instrument. People are excited about digital assets, and then it
yeah.
has a yield as well, and so I think Ethereum is just Wall Street's dream. It's their fever dream. And I think you're going to see this price maybe go to a level, and I'm not going to give a price prediction, but I do think you could see it double, triple, over the next few years. And it really wouldn't move the needle too much in terms of of its place. So in fact, I think for it to get to Bitcoin's market cap today, it would have to be at around 20,000. I think if I did the math right last time I looked at it.
Yeah, it's not doing
So
that.
yeah, so, so it's still got a long ways to go. I think there's going to be a great move into Ethereum, and I think that's another place to think about is the reason I like Ethereum, Dale, is because it reminds me of the rails that were built across the country back in the early days. So
Really?
if you were lucky,
Yeah,
you could have got in. Somebody could have been building the train tracks across your land or
right,
whatever, and you could have got a cut, of all the
right,
business being done. And that's how
right.
Ethereum is. Ethereum is quite frankly, a very boring topic. It's exciting because, and stablecoins, for example, was so boring. I mean, it's just cash on chain. I mean, it's the most boring. But it's the first killer app. It's the first killer app. So we're like, oh, okay, so cash on chain. So the stablecoin. But actually, later on, we're not going to be really enthused about stablecoins. But right now, it's new, it's novel, it's shiny. The same thing with Ethereum. Ethereum is like it's like the protocol that undergirds all of these transactions. And today it's like in focus. But I think we've talked about this before, but back during the dot-com bubble, we were getting excited about applications, not the protocol. People weren't like, I'm investing in TCP/IP, or I'm so excited about HTTPS. No, nobody even knows that. That's what Ethereum is. Nobody knows what that is. What they invested in was YouTube. YouTube is sitting on top of HTTPS, or here, look, here's Facebook. It's sitting on top of TCP/IP. So these protocols are built, and so Ethereum is that protocol. It is the rails, if you will. And so being able to buy a piece of that and then get a yield from it is kind of nice. But of course,
Yeah,
you're probably going to make even more money from the eventual dApps, the digital apps that'll be built atop of it. And you and I aren't talking about those currently. See, the stablecoin is the first killer app, so to speak, dApp. But there's going to be many more things that come out of Ethereum. Eventually, the idea of owning the rails with all of this will be like a utility stock. It'd be kind of boring. Who would go out and, that's not really what you would think of. You would think of the sexy things built on top of it. So
yeah,
right now, Ethereum is still a catch, I think, but I think over time it's going to fade. It'll be less interesting and less exciting, and all of the dApps that are built on top of it will be catching our attention. There'll probably
yeah.
be lots of money made there.
It's funny you talk about the railroads because I don't know, watching a video and the guy was talking about AI and how there could be a bus, but also most revolutionary thing in our lifetime, just like the other stages we went through. And got what he was talking about, that we could have that happen again where, .com, a lot of companies went away, but the internet still revolutionized everything. So you could have both.
Right.
You could have
Yeah.
both. I wanted to ask you if you grew friendly to cannabis stocks, because it seems like it might have been your style with real long-term bases, and they've kind of broken out in the last couple of weeks.
Yes. Let me pull up a couple of charts because I got a couple of cool ones. That's a market that I was in way too early, and I admit it. I got in way too early on cannabis, but I just stayed and I kept adding, and I think overall it's going to pay off. One of the ones that I got into early was Cresco Labs. Here's a chart of it. So I own Cresco Labs as an investment.
Yeah,
I was attracted to this company.
triple,
Yeah, yeah, yeah.
almost a
Uh,
triple.
but I was attracted to this company back in it's like 2018, 2019. I can't remember, 2020, where the company there was another company out in California called Origin House. Man, they had branding down so well. They really figured it out, and I thought this company is going to do well. And as soon as I went to go buy them, they were trading. And I went to buy it, and then Cresco came and swallowed them up. I said, "Well, who's this? Who's Cresco?" And so I started looking at Cresco, and I said, "Oh, okay. Well, smart guys. They saw the same thing I did, and they bought it. They got a good deal on it. So
Are they U.S. or
yeah,
Canadian?
yeah,
U.S. Good.
they're
Yeah,
U.S. So Cresco is one of the ones that we really like. I think it's going to do well. We've already seen it pop here. The news was the Wall Street Journal report came out a few days ago and just basically said that at the beginning of the month there was $1 million a plate fundraiser going on at the at the New Jersey Trump Club golf club, and apparently Kim Rivers from True Leave. Let me show you that chart. Let me pull
I
that one
know
up real quick.
Cureleaf, but
And Curaleaf also. That's much more of a global play. They just opened up a
yeah,
new.
in
They
Germany.
just opened. Yeah, they just opened up a new deal in Germany. See, here's True. Let's see. Where's True Leave? I've got it here somewhere. Uh, well, yeah, this one's fine. But True Leave, Kim
I talked
Rivers.
about, hey, George, you remember me talking about cannabis before Trump talked about it? So that was one of the reasons they were going to
Yeah,
reclassify. All right, go ahead.
yeah. Well, and it makes total sense that they would reclassify. I mean, if you look at the things now, I think they're ranked right next to heroin. It's like heroin
Yeah,
um, and methamphetamines, and then cannabis, and it's like that doesn't make much sense. And so
yeah,
they're catching up. But Curaleaf, yeah, Curaleaf is another one that I like, and it's also had a great run.
yeah,
Boris, I forget his last name. Boris is the he's a Russian,
yeah.
or background is of Russian family, but they're running
Buy a
Curaleaf, and
buy a wave two pullback is how it looks like to me. If it
yeah,
pulled back to $1.50 or so in the next few weeks, I'd step in because the bottom before was a theory, right, Jerry? I mean, we're just moving sideways, and until it really had a heartbeat again, because it kept going sideways. But now we have the evidence of a low. So if there are
yes,
pullbacks, that's an opportunity, not a
I
theory anymore.
absolutely. And so I wasn't thinking about cannabis, but you could also throw cannabis in potentially as a high conviction trade into the end of the year because we do that.
Yeah.
We do get that
Okay.
reclassification. You could really see these things zoom higher, for
Yeah.
sure.
Yeah. What a great interview. And you know what? Everyone's giving you compliments. So
Oh, thank
people
you.
like the face crowd likes you, Jer.
Hey,
So
well,
you want to wrap it with a little Elvis? I
after you, my friend.
If I said I needed you, you said you would always stay. All right, your turn.
Oh, that's good. That's good. Let's see. Well, I always do Burning Love for some reason. Why do
Yeah,
I always do the same one?
I don't
Lord,
know.
I feel my temperature rising.
Oh,
Yeah.
this guy's good. Huh? Tell me this isn't a great interview. Anyway,
Yeah.
entertainment, compelling ideas, Anyway, I always enjoy hanging out with you for half an hour, Jerry.
You were a
Maybe
good
one
man, Charlie Brown.
maybe one day we'll be able to break bread together. Who knows?
I would love that. I would love it. You stay strong and stay healthy and
Okay, buddy.
stay at peace, buddy.
And listen, people follow Jerry at the minimum on X. And why don't you show them your website so they know where to go
Yeah.
to learn about not just how to get in, but learning how not to get out and
Yes.
learning
Well,
how to hold. Look, I'm still learning how not to get out.
oh, we're
Okay.
all learning. We're all learning.
Still, you seem to have more, you have the patience of Job compared to me,
Well,
buddy. All right.
yeah, I didn't for a long time. It took a long time. And we love to teach that. So folks who like some of the guidance, I like some of these charts. I'd like to learn more. Well, we do a weekly call just like these. We do a webcast every Tuesday morning. Not every day like you guys. You guys have a lot going on. We do a once a week webcast. That's every Tuesday
Yeah.
live for our members. And you can join any of these levels here if you want to be a part of that. Get access to our trading software, all those trends we were talking about. Every day we put out a new trading idea, complete with buy and sell alerts, the whole 9 yards. Or maybe you say, I don't want to become a member right now, but I wouldn't mind buying a course. You just come over to followthemoney.com and click on the shop button. And we've got options trading, we've got swing trading, we've got day trading, we've got Bitcoin, we've got trend trading, we've got 3x ETFs and book bankruptcy of our nation and all that stuff in our store. So
Yeah.
you could just buy something and just kind of kick the tires. But also, as Dale was saying, we have that, of course, our X feed, FTM, like follow the money, FTM daily. And then also, our YouTube channel, and we have lots of podcasts and things like that. So I really appreciate the opportunity to let folks know how they can educate themselves. We've been educating folks here since 2010, and we have
Yeah,
folks all over the world. It's been a blessing for us and
yeah,
for others.
yeah. And you teach an important thing. You know, it's one thing to make a good call, it's better to make the trade, and the toughest part is the hold. So
Yes.
if you could learn
Yes.
hold strategy from Jerry, and it's not like inherent in you, um, that's worth gold. So that's a wrap, Jerry. Thank you, buddy. Good,
Thank you,
good,
sir.
good doing a little open mic with you at the end, and we'll catch each other in November before Thanksgiving, buddy.
It'd
Okay,
be great. Look forward to it.
Jerry Robinson, everyone. Calm demeanor, great radio voice, and he's an entertainer too. With an entertainer with financial wisdom. You know, a lot of entertainers wish they had it when they were making the big bucks, but then they went broke. So Jerry could counsel stars and athletes and everyone to make sure, and just average people, because we like to spend, and if you want to build a legacy for your family, you have to learn how to build wealth, not just trade. So
True
that's a
that.
wrap. Take it easy, Jer. Good
Okay,
talking to
you
you,
too, buddy.
buddy. All right.
Take care.
You're welcome, Will. You're welcome, Galaxy. You're welcome, everybody. Don't just count your pips, count your blessings, and see you for Turnaround Tuesday. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.